Are you an expert in your field?
Do you want your voice to be heard?
Maybe you have a great idea for a show but don't know how to do it.
Well, we can make it happen.
Email the New Jersey Podcast Guys at njpodcastguys@gmail.com. If you're looking to buy or sell a home in New Jersey, contact our Coldwell Banker office in Wayne at 973-694-8000 or call Tim direct at 973-865-0249. You can also visit his website at www.homesinwaynenj.com. Tim's promise to you and your family is to provide you with exceptional real estate service while always working to exceed your expectations. And remember, at Coldwell Banker, we never stop moving.
Welcome to the New Jersey Real Estate Show. Now, here are your hosts, Tim Waller and Matt Josephs.
Hello, everyone, and welcome to the New Jersey Real Estate Show. I'm Tim Waller, your host, and sitting to my immediate left is my co-host, Matt Josephs.
Howdy, Tim.
How you doing, Matt? He's also known as the voice of reason, and that will be revealed later on the show, trust me. Matt, we have a great show lined up for the listeners today.
We do, Tim. We always do.
Yes, we do.
Yes, we do.
And we will be discussing a very important topic known as title insurance and what it is,
What is it?
who needs it, why we need it, and what could happen if you didn't have it. That sounds pretty interesting, doesn't it?
It does,
Okay.
yeah.
All right, just want to make sure.
It sounds actually scary. Like, what happens if you don't have it?
Well, I'll tell you, you'll find out. Our in-house guest today is Erica Baldino. Erica is a licensed title producer with Kensington Vanguard National Land Services. It's one of the largest independent full-service title agencies in America. She represents a national client base, ensuring both residential and commercial refinances and purchases across the country. Having closed over 1,000 transactions thus far, and believe me, she doesn't say that to impress you. She says it to impress upon you that the more you do of something, the better you get at it.
All right.
So Erica's experience with the whole title process, including acting as a licensed notary at the closing table. Recently, Erica was invited to be a part of the Rutgers University Center for Real Estate Emerging Leadership Council, where she is able to mentor college students going into the real estate field. Erica sits as a board for the North Jersey Chamber of Commerce and Eastern American CDC. She is an active affiliate member of the Passaic County Board of Realtors, as well as co-chair for the board's Young Professional Network, known as the YPN. Erica, welcome to the show, and we're glad to have you here today.
Thank you very much for that wonderful introduction.
Oh, you're very welcome. And let me ask you this. How did you end up in the title insurance business?
Well, I went to college always knowing I wanted to be a title rep.
Really?
No. Everyone
She
always
threw me on that one.
Yeah,
She got me. Okay.
It's pretty good.
All right, that's the type of show it's going to be today. Okay.
Everyone always asks me that question. It was just one of those opportunities that landed in my lap. I had a neighbor who actually owned a title company, had been approaching me with the idea for a while. I put it off because I honestly didn't know what title insurance was. And finally, I was at the point in my career where I was ready to take a risk, because selling title insurance pretty much mimics selling real estate, where you're commission only, you have to build a book, you don't have set work hours. And I thought, let's take the leap.
Wow. Now, do you have to be licensed?
I do. So I had to take a licensing test. I had to take a class, and I've been fingerprinted, so I am licensed with the Department of Banking and Insurance.
Wow. Now, what's the difference between a title officer and a title representative?
A title officer would be the person that's behind the scenes, and they're making the call on whether or not you can insure certain properties. Most title representatives are kind of just selling the product and not really looking over the meat and potatoes. I kind of do a little bit of both.
Okay. So why don't you explain to the audience exactly what title insurance is?
So I tell the layperson that title is actually the insurance, the only insurance that insures the past and not the future. Most types of insurance, such as medical insurance, insures in case you get sick in the future. Your cell phone insurance insures in case you break your phone in the future.
Or drop it in the water.
Or you drop it in the water, right? Title insurance will insure ownership of the property in case anything bad or negative to the property happened in its past.
Like what? Give me an example.
So I'm sure we'll get into this in extensive detail because title's so exciting. But one of the things that we look for are any liens or encumbrances on the property. For example, if the person selling it to you has a home equity line of credit that somebody forgets about, that could come back to haunt you. They could then foreclose on your property because it's still open of record, and you could lose your home.
Even though it's like a previous owner's?
Correct.
So
because it
that's
sticks
not
to the
attached
property.
to the person, but to the property.
Correct.
Mortgages
Oh,
always
I
stay
get
on
it.
the
Okay,
property,
because
right?
Correct.
All right. That
Correct.
makes
So
sense
it's
then.
attached to the property. So if somebody like me forgets to tell somebody like you about that when you buy, you then have to either, hopefully, that you don't just lose your house in foreclosure. You catch it as it's happening.
Mm-hmm.
You look at my title policy, and then you would have a claim against the title company where we would have to then pay the mortgage out in face value.
So if I bought a house and I did not get title insurance, and I find out that somebody had taken a line of credit on it 10, 20 years ago or whatever, and it was still, outstanding, the bank can take the home from me?
If you're not making the payments.
Well, here's the thing. If you bought a house without title insurance, it would mean you bought the house cash because you are not legally allowed to buy a house without title insurance if you're a mortgage buyer.
Yeah, all right.
If you bought the house without title insurance and the seller forgot to disclose that there was an open old mortgage that was never discharged, it was still active, yes, the bank could foreclose on that mortgage, even though it's not you.
So you really between that and property taxes, like we really never own our home, do we? I mean, there's always something that can take it out from under you.
Well, between eminent domain and property taxes, yes.
Yeah.
I mean, typically your title should be free and clear. It's a very low margin of error. I would say there's like 2 or 3% of claims for every transaction that happens.
But it only takes that one.
But it takes that one that could actually kill a company because God forbid
Or kill a family.
Yeah, right.
could kill a family that was foreclosed on, right?
Literally.
Not literally kill. No. But it adds,
Devastate's a better word.
The father goes
when you start receiving foreclosure notices at your home and you're paying your mortgage,
right.
If you throw them in the trash, there's a problem. Typically, you would go call your attorney that represented you and say, listen, the sellers are getting these notices and, it's still coming to my home 2 years later. I think there's a problem. They would call us and we would have to pay them out and fix it.
So then now I just bought a house. I'm in there 6 months. I start getting these foreclosure notices about whatever. And, this old mortgage on it. I do have title insurance. That I got from you. Mm-hmm. What now?
So this means that I didn't do my job very well, which this normally wouldn't happen.
This would never happen.
No.
So this is totally hypothetical.
This is totally hypothetical. Mm. But what this would mean is that I didn't do my job and I missed it. So you would either call the attorney that represented you or you would call your realtor because you'd have to figure out who I am. Mm-hmm. And then you would call me and we would file a claim. Like you would do with homeowners insurance, but this is your title insurance. So you would enact a claim. If the open mortgage is $50,000, I would have to pay $50,000 out to close it and make sure that you're free and clear.
Okay.
So in other words, you as the homeowner, when you do have title insurance, that's giving you the reassurance and the peace of mind that God forbid an incident like that happened, it's not going to cost you any money. Right. That's why you have the title insurance, and that's why it's so important to have.
And this isn't like other insurance companies, like say your car insurance that just, or whatever, it just doesn't want to pay and they give you the runaround and you think you're covered and then you're not covered.
Correct. So the difference between us and all the other insurances out there is, number one, we're a one-time fee paid at closing. So you don't pay for title insurance every year like you do for your homeowner's insurance or your car insurance. We would pay it and satisfy it, and then it would be up to the people on our back end to figure out how to recoup our losses. So we have extensive insurances, and we have very good legal counsel who then might go after your seller for not disclosing this mortgage, or go after the people that looked for the mortgages. Why did they miss it? So we would still recoup some of the money, but for the most part, you're out on a claim.
So some of the big underwriters in the title business are Transamerica?
You have Stewart, you have First American, you have Chicago.
Right. So Kensington Vanguard is underwritten by who?
All of them.
We
have 7 national underwriters that we work
which
for.
is pretty impressive.
Mm-hmm.
Yep.
Mm-hmm.
The reason that we do this, and this really adds to the complexity of things, I know we're here mostly for residential, but typically in commercial, Because commercial transactions are so large, now we're in the billions of dollars, they have to be written with what's called co-insurance. So you might have one underwriter on 50% of the property value and another underwriter on the other 50% of the property value.
Gotcha, which makes sense. This way, the liability's shared.
Correct.
Yeah.
Back to the cash situation. Let's say we'll use the $50,000 that you used before. So it's $50,000 on the property. If I've got the money, I can just pay that off.
You're going to be upset. But
Of course I'm going to be upset.
Yep.
Yeah,
you
absolutely.
can pay it
I
off.
didn't know about it.
Yep.
Or get kicked out of my house. I mean, there's no recourse for me. There's nothing I can do.
You bought it from the sellers.
But can he assume the payments on that note?
You'd have to refi it
Refi it.
so that it goes in your name.
So I'm either stuck with this debt that somebody else put on the property, or I have to get the hell out. But I mean, I didn't know about it, so I can go after the seller.
No, because you
Because
were
I didn't
given
get title
you were
insurance.
given your due diligence period on the property. So you did your home inspections and you did everything else you were supposed to do. Why didn't you check the property for liens and
Okay,
encumbrances?
so when I'm in that situation, or when you do your job, before you said, that means that you didn't do your job if this happens, that I got, how do you find that out?
Okay, so this is it varies by state. So we're going to talk about New Jersey. The state of New Jersey has deed and record rooms in all of the counties.
Okay.
So
Also known as the vaults, right?
the vault sounds way scarier than it actually is.
vault.
Yeah. Welcome to the vault.
The vault is open for public record. So anyone can have access to it, but typically no one goes down there except for my searchers.
But the vault is actually quieter than a library.
Oh, I bet.
No
Yes.
one talks in the vault.
Is
Yeah.
correct.
No,
like a secret
I've been to
world.
a county archives in
Right.
Pennsylvania, and it was very weird. Like, everybody was quiet.
Right. So all of those weirdos down there, and my searchers are going to kill me for saying this, they're all subcontracted by me.
Okay.
So what happens is Tim Waller sends over a title order. It's for 123 Main Street in Wayne. Okay. We go to the Passaic County Vault, and I tell one of those guys, listen, we need to go back 60 full years at 123 Main Street in Wayne. I need to know every mortgage that was taken off on the property. I need to know the chain of ownership. I need to figure out any easements, which could be a shared driveway, anything of that nature. Utilities. And I need to know judgments on both the buyers and sellers.
Right of ways.
Right-of-way easements. Very good, Tim.
Tim knows his
Encroachments.
stuff.
Encroachments. Yep.
Jim
Well, he's
Croce. All right. So, okay. So that's all on record in the county.
correct.
And the buyer who's buying cash can go and look that up himself.
He could.
But does he need to speak Greek? Is it hard to understand?
It's a bunch of really big, dusty old books that go back as far as the 1600s. And I mean, these searchers, my guys are so knowledgeable. I swear sometimes they have half the maps memorized.
Yeah.
I don't think that they would be able to do an accurate job. It's not like it's indexed online and I can just type in 123 Main Street and boom, everything that you want just
Right.
populates. It's not like that at all.
I want to give Matt a trivia question.
Okay.
You have a grantor and a grantee. The grantor is who?
The grantor is the person who makes the grant.
Okay. All right. I'll
That's
take
fair
it.
enough.
I'll
okay.
take it.
Ding, 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 ding. You
Convoluted.
got that one right.
It's a
Okay.
little convoluted.
Now,
but
you have a mortgage and a mortgagor. Who is the mortgagor?
The mortgagor is the person who gives you the loan, provides the mortgage, right? And the mortgagee is the one who receives it.
The mortgagee is the one who
Receives the
Signs
or
off
holds
on it.
the mortgage.
very good.
Yeah.
Thank you.
Now, you have a muggy and a mugor.
You've lost me.
Muggy is hot and sticky, and the mugor.
Okay.
know.
All right, getting back. I just thought that was interesting because that's what they have. The grantee, grantor books. They have the
Correct.
mortgage
Okay,
and
so
deeds. and
you're saying I'm convoluted with my grantee grantor. How does grant work in this context?
in a search. In other words, let's say Matt bought my property. So I'm the grantor. He's the grantee because I gave him title to my house. He's the receiver of the title of my house. So they
Oh, okay.
check
So
that.
I grant
Right,
you my
correct. And
property
that's how
as
your
the
deed is then
grantor,
written. Right.
and I've
That is
been
how your
granted
deed
as
is
a
written.
grantee.
Right.
And then
So we call that a conveyance.
And then
I mean
they go back
grants.
64 years checking all those grantee and grantors. That's
Yeah.
called a full search, correct?
And we would call that your chain of ownership.
Okay.
Now, is there a continuation search in certain instances where they don't have to go back 64 years? Where, let's say, property was conveyed only 5 years ago and there was a full search done prior to that?
We don't do them anymore in the
You
state
don't.
of New Jersey.
You go all the way back.
Everyone wants you to do a full 60 years in case the other guy that did it messed up.
Gotcha.
You don't want
Fair
to assume
enough.
his
Yep,
liability.
absolutely.
For refis, you only really need 16 month, 3 years, 4 years, especially if they just bought the property. So refinances are different, but in refis, you're only insuring the bank and not the property owner.
Okay.
In a buy, we give out two types of insurance: an owner's policy and a lender's policy. So it is a little bit different. And then, of course, with commercial, that's a whole different ball game. They go to the beginning of time.
Now, explain this to me, because anytime there's a mortgage involved, like you said, you have a mortgage policy and you have an owner's policy. So the mortgage policy, that gets issued right away, correct?
Yes,
The owner's policy gets issued at a later point in time,
between 60 to 90 days.
60 to 90 days. Okay. So, in other words, homeowners, then when they're at the closing, that's why attorneys say, as soon as I get your owner's policy, I will forward that to you.
Correct, and a copy of your recorded deed.
Correct. Okay. All right. And what does this title insurance cost?
Good question, Tim.
Thank you. I like that.
Title insurance is regulated by the state of New Jersey. So the actual insurance premium,
Wait a minute. The state of New Jersey actually regulates
they
title
do.
insurance?
Yeah.
Unbelievable.
Wow.
I know. So I can't charge you willy-nilly for your $300,000 house. There's actually a premium, and that is calculated. Everyone charges you the same amount for that $300,000 premium.
Okay.
So no title insurance company has kind of an advantage over the other one because the rate is exactly the same.
I would say that no title company would be able to come in cheaper than anybody else on the premium.
Right.
But invoices would vary on all the ancillary charges. So
Ancillary charges, meaning,
So we would charge a settlement fee.
right?
Those vary. There are some title companies that'll charge you copy fees and courier fees and printout fees. So there are more expensive title companies as a whole on the invoice, but the premium must always stay the same. That
Okay.
you cannot
Okay.
mess
Fair
with.
enough.
So then you can shop around based on the fees
You could shop around if you wanted to. The problem is the consumer doesn't know about it.
that there are going to be fees in there.
Well, the consumer doesn't know what title insurance is, so how would you know to shop it? You understand you're supposed to shop for your mortgage. You may shop for a realtor. You may shop for a home inspector. You shop for your attorney, but title doesn't fall on that list.
Right.
So
Right. Yeah, you're
So
correct.
the realtor would have to advise you.
Well, listen, our fabulous engineer, Peter Cornell, has just given us the high sign. It's time. We've reached the midpoint of this episode.
Already?
And, yeah. When we come back, we're going to talk about other responsibilities that the title company performs during the home purchase process. Now we're going to hear a few words from our sponsors.
The New Jersey Real Estate Show is brought to you by the law offices of Joseph C. Petriello, located in Wayne, New Jersey. To contact them, call 973-890-7262. That's 973-890-7262. Are you purchasing or refinancing a home? Do you need a free same-day pre-approval? Then call Dean Scaduto from Coldwell Banker Home Loans at 201-322-3456. That's 201-322-3456.
Welcome back to the New Jersey Real Estate Show. We're here with our guest, Erica Baldino from Kensington Vanguard National Land Services, as we continue our discussion on the importance of having a title insurance policy to protect your home ownership interests. During the break, we were talking about some examples on when a homeowner was grateful they had title insurance. So before we get to that, I want to ask Erica this question. What are the other responsibilities the title company performs during a buyer's home purchase process?
So, of course, we're going to give you your title insurance binder, and we're going to make sure that everything with the property is okay. But the
Time out for our listeners. you said the word binder.
Oh, yeah.
So we need
it
to
was a
clarify
vocab word.
what a binder is.
It's an insurance binder. So it's the document that tells you what we will insure over and what are exceptions and what you need to fix before we close so that we're not going to insure.
Okay, and
over.
exceptions would be you're insuring everything with the exception of this, this, and this.
Correct.
Okay, got it.
And this is stuff that your typical purchaser, you're probably not even going to look at your title binder through the process. That's something that your attorney would look at, and they would talk to the other attorney, and they would figure out how to clear title. You always want to hear the words, you have clear title, when you're taking ownership of the property.
And there's two schedules, right? There's a Schedule A and a Schedule B? Mm-hmm. Okay. And Schedule A is the meets and bounds description? Mm-hmm. Wow.
He's good.
And what's Schedule B?
You have Schedule B1 and B2, and those are the requirements and the exceptions.
Gotcha. Okay. All right. So can a buyer choose their own title company, or how
A
does that
buyer
work?
is totally 100% supposed to choose their own title company because they're the people paying for it. Again, it is considered a settlement cost. It's a closing cost.
Mm-hmm.
So the buyer is allowed to elect whoever they'd wish to insure their property, the same as they do with homeowners insurance.
Okay. So what are the benefits then of using Kensington Vanguard in particular, opposed to some other title company? And of course, we have to throw you in there because they get the benefit of using you, Erica Baldino.
Right.
Well, Kensington Vanguard is regarded as, I think, one of the largest title companies in the nation. So we have the size and power that make us a great, reputable company.
Right.
On that, on a different scale, we also have a great local connection. We have an office right in Parsippany, and we employ the best searchers in the state to work in the vaults. The little twist to everything is that you get me to show up to your closing to then notarize all the documents. So I would say some title companies just send straight notaries that don't really understand title. I attend the majority of my closings, so you'll get everything explained to you by a professional, which I think is very important.
Very nice.
What happens if I choose to refinance a couple of years after I've owned the property? Do I need to pay for title insurance again?
You certainly do.
I do.
You do.
Why?
You don't need to pay for a new owner's policy because you, the owner, are still protected from when you bought the house.
Okay.
But because it's a new lender, now we need a new lender's policy. And the funny twist to title is that you're the one paying for the new lender's policy that's protecting the lender.
Okay, but why though? What could happen?
Well, can I just try to answer that?
Sure.
Let's suppose. Let's suppose you were talking to someone who was offering hard money.
Uh-huh.
And you took that loan.
Okay.
And then you had to refinance. And the title company found out about that loan.
Okay.
That's why, am I correct? They have to check all that stuff. Because now your title insurance is different than what it was before.
Understood.
And, we also look at judgments. So let's say you and your lovely wife bought a house 5 years ago. You got divorced after 2 years. You now owe
Sounds
a
about
boatload
right.
of child support. You haven't paid your child support in 3 years, so now you're a deadbeat
Come
dad.
on, Matt. What are you doing?
I'm painting the
Times have been
picture.
tough.
I'm painting the picture. You will get a child support judgment slapped on your name.
Sure.
Your new lender is not going to want to lend you another $300,000 refi if they know that you owe 15 in arrears to your lovely ex-wife.
Mm-hmm.
So
Not so lovely.
she wouldn't be lovely anymore. No.
That's why she's my ex-wife.
That's why she's the
Okay.
ex.
Here we go. During the break, we were talking about those examples when a homeowner was grateful they had title insurance. Can you share some of those stories, hopefully that had happy endings?
Ooh, happy endings. Let's see. So, we talked about the example of having an open home equity line of credit.
Correct.
So in that case, when a homeowner goes through the foreclosure proceedings or they're starting to foreclose, you're very happy that you have title insurance. Other happy.
I'm going to give you an example.
Okay.
Peter, hi Peter. Peter buys a beautiful house on 5 acres. He paid cash for it. He was smart enough to get the title insurance, but he didn't bother to get a new survey. He used a survey that was 20 years old. Now, his neighbor starts putting a fence up on what Peter thought was his property.
The old boundary dispute.
And Peter says, dude, what are you doing? Guy says, this is my property. He says, no, it's not. I got a survey right here. He says, well, no, here's my survey. What happens?
Well, if your title company accepted that 20-year-old survey, and what we call if they endorsed it into title, that means that they promised you that your property lied in the description that it gave you. If that was wrong, then you have a claim because for your $300,000 house, you thought it was X acreage and it's really Y, which means it's not worth $300,000 anymore. Tim would have told you to go in at $275,000.
Okay.
So now there's a $25,000 discrepancy on how much the property value is, which means your bank that lent you $300,000 to buy the house would have never lent it because it's not worth what they lent you. Now you have a claim against title insurance.
So, let's say the house that Pete bought, it's in a neighborhood that's 40, 50 years old, right? It's house after house, a regular old little neighborhood. What's going to change in the property lines in 20 years?
Well, it's not so much as what is changing because they don't typically redraw property lines unless there's been some seizement of property. So if there's been an easement, if they've needed to run utility wires, or, anything drastic, right of eminent domain.
Yeah.
But let's just say your typical block that nothing drastic has happened to it. What happens is people like to do the old do it yourself. So Joe Schmo, your neighbor, puts up a random fence in what he thought was his property. Didn't get a survey, didn't get a fence guy to come out. He just kind of threw a fence up there. So now you've always thought that your property ended on a certain line, and really it's ended on a completely different line.
Right.
And in fact, I just did a purchase the other day where the pool kind of hung over the parameter a little bit, 2 fences hung over the parameter a little bit, and so did a cement block, like a pad for a patio.
Uh-huh.
It's just because the prior homeowner figured that was his lot, and it wasn't, but it's within inches.
They don't put pins?
That costs extra money.
I thought that they did that
everyone
when
hates to spend extra money.
They call it stakes.
Stakes, stakes.
Yep.
$100 each.
I think it's what?
It's
Yeah,
$100 each. It's
a lot of
between
money.
$100 and $150
So
each.
they don't just do that when they build them in New Jersey?
No. So when you start your home buying transaction, of course, we always recommend to get a survey, and surveys vary between $700 to $850. And then you can get corner markers or stakes so that you can tell everybody that these corners are mine. And they're between $100 and $150 a corner.
Okay.
I would say 80% of people just say, nah, don't worry about it. We have a fence. The fence is good enough.
Yeah. Yeah, and that can get costly if your yard is shaped like an octagon.
Would
Correct.
you say most title claims are over boundary line disputes? Because
No.
No?
No, I would say they're over open HELOCs. Personally, I've seen it because
HELOC meaning
Home equity line of credit.
Oh, okay.
Right.
the reason that I see a lot of them is because, or at least they cause the biggest thorn in our sides. When you take out a home equity line of credit in the state of New Jersey, you do not need title insurance, which means no one is watching this on the back end. So when you finish that home equity line of credit, they do something which is called a discharge. So the home equity line of credit is now everyone in the deed and record room, they see it on paper, and then the discharge is supposed to get filed with, then cancels it.
Okay.
People forget to send in the discharge because years ago what they would do is they would just send the discharge to the homeowner's house and hope to God they filed it. Guess how many homeowners sent their discharge into the county? Like none. Because no one followed up on it.
Wow.
Typically, your title company does that. So we would take the discharge and we would file it. So because years ago this was normal practice, we have all these super old home equity lines that are out that will then fine, not discharge properly, and it causes a headache.
Now, this question is coming from me, the realtor,
Okay.
because doing this for 32 years and having numerous closings, I would like an honest, truthful answer. How long does it take, usually, to do a search?
That's a hard question. For your standard, not a very complicated property, not a lot of foreclosures. I'm talking your standard run-of-the-mill, crispy clean property.
Does it go back to the 1600s?
Doesn't go back to the 1600s. Wasn't 25 owners in 2 years. A typical searcher will tell you 2 days, and then you'll need a third day to write the binder. So you could do soup to nuts in about 3 days.
Okay. And more complex transactions may take
A week.
week.
Week and a
Okay.
half, 2 weeks. I've got a commercial search right now that's 9 weeks.
Gotcha. Okay. No, I just was curious. That makes sense. That was a good answer.
And I mean, I've pushed rushes. I've turned a title binder in 24 hours once, and I don't like doing it because then I have to rush my searchers, and if they miss something, I'm the one that gets sued.
Right. Haste makes
Gotcha.
waste.
Right. Haste makes waste.
Okay. Well, listen, buyers often get to meet their realtor, their attorney, their home inspector, their mortgage rep during the home purchase process. Do they ever get to meet the people behind the scenes, like the title company?
Most of the time, no. They never get to meet their title company. Typically what will happen is your title company does all this work behind the scenes, and then they send some random notary to the closing to watch everything get done. With KV, they send me. So at least you'll get to meet me. So that'll be another person in your transaction that is able to give you knowledge and guidance at the closing table.
But it also gives you the opportunity to meet the seller's attorney as well.
I like to meet everybody, correct.
Who's not ordering the
Correct.
title, because most orders for title insurance are placed by the buyer's attorney.
Okay.
Whereas in Florida, the seller pays for title insurance. In New Jersey, the seller pays for the
You're
title
correct.
insurance. In New Jersey, the buyer pays for the title insurance.
Huh.
It's
Doesn't it,
different.
I mean, it makes more sense to have the buyer pay, no?
Well, there's two schools of thought because the research that we're
Obviously.
doing is really on the seller's nonsense. So it's the seller's open mortgages, it's the seller's old judgments, it's all the
Right.
stuff that affects the seller.
Okay, so then if they find something that predates this latest sale, then the thinking is that the seller should have known or should have warned us, and so therefore their policy should be hit.
Has there ever, go ahead.
Is that a yes or no?
No, well,
Objection.
the thinking is that
Wrong.
their policy should have caught it.
Right.
And if their policy did catch it, then, and if they insured over it, then yes, they would be hit.
I kind of like the Florida way better.
Well, I like when they split it because there are some counties. Florida's weird. There's some counties in Florida that the sellers pay for, and there's some counties in Florida where they split it. So 50% the seller pays and 50% the buyers pay.
In Florida, the last time I checked, you don't have regulated rates, so it's competitive.
Okay.
Right.
Yeah.
So one
They're
title
more-
company
right.
can give her a lower price than another title company. Whereas in New Jersey, you don't have that. As she said before, each title company has to charge the same fee for that insurance.
What is the New Jersey regulated rate?
It varies on purchase price. I would have to know how much
So
your
is it a
home is.
percentage or is it a
it's,
ballpark?
It's like a dollar figure. Like for every $100, it's
Right.
a dollar. However they do it, every $1,000 is a dollar.
Like a
Insurance.
$300,000 house.
I'll tell you right now exactly,
Oh,
so that I
yeah.
don't quote wrong numbers because that could get me in trouble with my license.
Okay.
Okay, let's see. For a $300,000 home,
Right.
your premium would be $1,375.
But that's a one-time fee.
one-time fee.
And that's not the whole invoice.
Right. Of course
There's
not.
more
And
on the
think-
invoice.
Think of what your homeowner's insurance costs on an annual basis, right, Peter? You're paying over $1,200
What?
a year for your homeowner's insurance?
Yeah, less than that, yeah.
Yeah. And that's every year.
Right.
Title insurance, one-time fee.
It's a one-time fee. Okay. And then
Right.
plus all the other fees that are on top of that as well. And I had a question about that, but I can't remember. So go
One
ahead.
of those fees is settlement fees. And what settlement is that's for my back office to now prepare the closing disclosure, which is your fee estimate that you're going to sign the day of closing, all the numbers, the taxes, the escrows, and then, of course, send somebody to the closing table. So that's what your settlement fee encompasses.
Pretty interesting stuff. And a lot of people, they don't know what title insurance is. So I am hoping that our listeners today got a pretty good feel of what title insurance is all about and how you really, really need it.
Yeah.
And it's something, like she says, because it's a one-time fee. Once it's done, you never hear about it again.
And it lasts for how long?
Forever.
Forever.
For your ownership
for
of the
me.
property.
Yeah, the buyer.
I tell people all the time, title is vital, but just
That's clever.
it's very clever, but no one knows about it. So
Right.
people
No,
think I
that's-
do like car titles. They think that that's what my job is.
Mm-hmm.
They hear the word title and assume it's your title deed to a car. But
Well, when Tim said that you were coming in to do titles, I said, "What's her title?" I thought you were doing like, lady and
right,
lord and all that.
you
stuff.
can call me queen, but title queen.
No, that's more than a title. That's
Okay. So if you had just one piece of advice for those in the home buying or selling market, what would it be?
Education. Buyers don't know about title insurance because they don't ask the real estate professional. I think I always advocate for anybody that I know in the market to ask a lot of questions and do their own research.
Right. Now, at what point in time does an attorney in the process order the title insurance?
It really varies. It's on a per transaction basis. For example, I just had this happen. There was a transaction that seemed weird where the realtor made out a contract for the husband and wife, but when I quick looked at the taxes were only made out to the guy. So there was something wrong in the ownership somewhere. We pulled title immediately to figure out what was going on. If nothing like those red flags stick out and there's no cause for an immediate trigger to pull title, we typically see attorney's order after the mortgage commitment is issued. So once you're rolling with your mortgage, home inspections are completed, we've figured out those negotiations, we'll then pull title, clear title, and we'll close you.
Okay. A lot of times in title, they do what's called a judgment search or a Charles Jones search. Mm-hmm. Correct? Mm-hmm. And a lot of times, I personally had deals fall apart because judgment showed up on that title search that didn't show up on the credit report.
Correct.
And those judgments couldn't be satisfied. Some of them were tax liens.
Stinks.
And therefore, the deal
dies.
imploded. Mm-hmm. Correct.
Mm-hmm.
Yep.
We see that.
Erica, you've been very informative. We had a great time.
Yeah.
Thank you very much. This was a lot of fun.
I hope people got a real good understanding of title insurance. And unfortunately, we've reached the end of another great episode.
Oh, man.
And I hope during this episode, you all understand why I do refer to my co-host Matt as the voice of reason.
I don't think once every time you say
he did well today.
It'll be evident in this episode. It's never happened.
He's making me look like a liar. But Erica, it was an honor and pleasure having you here on the show today. We thank you for your valued time and sharing your expertise with our listeners on the topic of title insurance. It was extremely helpful, informative, and insightful. And Erica, if anyone needs the services of a title company and or title insurance, what's the best way for our listeners to contact you?
So you can call or text me, and my phone number is 609-706-2331.
That's fantastic. Got a
Thank
website?
you.
Email?
You can go to kvnational.com, or my email is ebaldino@kvnational.com.
There you go. They heard it straight from Erica Baldino. Now, please make sure you tune into the New Jersey Real Estate Show next week as we have a very, very special in-house guest.
Who's that?
It will be none other than me,
Oh. Wow.
your host of the New Jersey Real Estate Show. Guess what I'm going to be
What are you going
discussing?
to be discussing?
All the pros and cons of being a for sale by owner and everything a for sale by owner should know.
This is
Fizbo.
interesting. I like this.
This is going to be really,
Yes.
really interesting
wait.
and insightful.
All right.
So you don't want to miss this, because I will tell you one thing, that the biggest reason a for sale by owner sells their home on their own is why?
They don't want to share
Money.
the commission. They want all the-
Outstanding. Boy, you know what? You got 100 on the trivia
Voice of
questions
reason.
today.
I know.
That's unbelievable. The voice of reason bats 100%.
It's like
Unbelievable.
5th grade trivia questions.
All right.
Come on.
So in any event, we thank you again for listening to the New Jersey Real Estate Show, and I leave you with this quote. You know what it is. Great leaders aspire to lead and then lead to inspire others. Stay safe, my friends.